Welcome back. I'm the Wall St Yardie. This is your weekly market report. Week starting April 5th, 2026. Let's jump right in. First thing we're going to take a look at, as we always been doing here for the last couple of weeks, is the oil futures. Crude oil, energy is kind of going nuts right now with the war in Iran. So we always want to keep an eye on this. As the price of oil has gone up, the market has pulled back. This week we saw a little different kind of correlation with that, but we'll talk about that when we hit the SPY chart, so we can see kind of how maybe some market manipulation was going on and how we want to deal with that going forward. All right, so just real quick, looking at the prices, these are the futures for oil. We always look at the Brent, which is the international oil, and then WTI is the US oil, right? So looking all the way out, we know our target is to get oil under 90, right into the 80s. We're not seeing that happen here in the futures, and the futures are always looking forward, looking out to kind of predict kind of how the price of oil is going to change. So that's why we always look at this. So we're looking at this not until September. We have a whole nother quarter. So that means we're going to deal with high oil prices in the first quarter of this year, the second quarter of this year, all the way into maybe the last quarter of the year. So 3 quarters of this year, we're going to be dealing with higher oil prices. That's going to translate into higher inflation. Regardless of what the administration want to say, that's going to be higher inflation. It might not last long after that, but we're going to have to deal with it, which means the market is not going to like it. We're going to see some downturn in the market if that happens. And you got to pay very close attention to what's going on here. If we don't get the straight oil moves open, just forget about this price even coming down. It's just not going to happen. So matching up August and September there, and if you look at the US crude, it's a little better story. You get into under 90 in July, but not until really, again, August, September. So we're looking at 3 months in 3 quarters rather in 2026 where oil prices are going to stay high. So let's jump over to the VIX real quick and see what we have there. With the VIX now, what we're seeing is that our VIX has dropped quite a bit. I dropped a video earlier this week. It was a short that talked about VIX hitting up to 40 and the market bouncing this week, right? So we're seeing that here on the VIX. Remember, we're watching VIX. When VIX gets up above 30, we really, think the market is due for a bounce. We might be hitting on market lows. Remember, the VIX is the volatility index. This one measures fear. So with everything going on with oil and the war and everything else, we want to keep an eye on the VIX. We want to keep an eye on volatility. The volatility is the wide range or uncertainty that is in the market. This is how we measure it. We measure it using the VIX. So looking at the VIX, we drop down. We want to see the VIX drop below 23, right? When we see that, then we know the market is ready to start turning up and maybe start heading in a bullish fashion. Anytime it's above this level, 23, 25, we're still in a downturn, okay? So as long as it's staying above this level, we got to keep very protective. If you're looking to buy stuff, you want to be extremely selective at this point. If not, you might get a little hurt. So you want to be careful here. Watch the VIX, keep an eye on this every week, see how we're moving. If it starts, staying in this range, we know we're in a bear market and we're going to stay there for a little more while. So what we're going to do now, let's look at the secret chart and see what we get. All right, now secret chart time. So remember our secret chart, we use this one because all of these companies, Netflix, Tesla, Apple, Nvidia, Google, Amazon, Microsoft, and Broadcom, these guys measure 35% of market movement. So the way these guys go is typically the way the market is going to go, especially if we're looking longer term over, a year, 2 years, whatever. We're going to watch this very, very closely. So what we got this week, we're still in our downtrend. So, that hasn't really changed. We have a long way to go. I'll actually add a second trend here off of this because we saw some highs start forming here. So we touched on that. So let's touch here. Maybe turn our magnet back on. And let's just use this high kind of as a guide. I'm going to drop to this little high because it allows me to touch both. The more touches you get, the better, but you don't want to cut through or cut into any candles. So that's the key there to kind of keeping it sane. So now we're starting to create this is what they call a fan, right? So we might get even a third trend line here and we start fanning things out. So this gives us maybe another early indication of when things are turning up. As you can see, even drawing this, we're still in our downtrend. We're still under our trend line. So maybe we can even get up to this trend line and bounce off. That might be what happens here. We saw we formed yet even another high. So if I did want to continue to fan down, I could, but I think these are too close at this point to do that. So we won't do it yet. So what we saw here is these big names, right? These are the big, what they call mega cap stocks, have bounced a little bit. So we thought we were going to see that bounce. Remember last week we saw VIX touch 40. We know above 30 is probably, you know, when the lows are getting in and we're due for a bounce. So we did get that bounce, but look what happened here. This is the thing that concerns me right now with the market, is that we did get this higher high, and then the very next day, right, our last day of the trading week here, we had a shortened trading week due to Good Friday. On Thursday, we did get a positive green candle here, but remember, look, the high is lower than the day before. The low is lower than the day before. These are all the horror marks. This is what we would call a pivot, right? So we have our point here. It's this very pointed level. And then we're going to probably see this. These are all the hallmarks of a downtrend starting, right? So we're going to watch it closely because we still did close above our support level here. So, you know, we could see Monday, Tuesday, maybe we stay inside of this range for a little while because of kind of how the war is going. We you know, there's still a lot of uncertainty. We're also heading into earnings season. So all of these companies, except Nvidia and Broadcom, because they just reported, all the other companies are going to be reporting earnings here in the next couple weeks. So we want to stay very close to that to see how their first quarter results are. If the earnings are not growing, or they don't, more importantly than if they beat the expectations or not, is what they say about going forward. The market always wants to know what's going to happen next. We really don't care about what you did for me. We want to know what you're going to do for me lately, right? So what you're going to do for me next. I want to see how you're going to grow my money going forward. So if they don't say they're growing or expanding their earnings, or they don't see growth in the future, expect more market pain. If they come and they give that positive, then we can hold on and kind of wait and see what happens with the war, and then we can decide what might happen after that. So that's what we're looking at here with the big boys. We got a little bounce like we expected last week, but we're starting to see hallmarks are pulling down, but we're stuck here at this support. So watch very closely. Monday, Tuesday, do we break and close below this level, or do we bounce and stay inside the range, right? So that's what we're going to be watching on this. Jumping on over to the SPY now. What we have here, SPY, is the S&P 500 ETF. I like to give you these in the market report so you see what the overall market is doing. But you can certainly trade these tickers as well, right? Not financial advice, but if you're looking at kind of how the market is moving, you can have an idea. If you just want to have broad exposure, meaning you want to, you know, buy just a bunch of stuff, you don't have a lot of money in your account maybe, the ETFs are a very great way to do this. This is why I use these for the market report. We see the big picture, but I can also trade them, right? So just a little quick tip there. But let's look at the chart here. I did a couple days ago, I think it was on April 2nd there, I did a short video to talk about what I was seeing with this price action here on the SPY. So what we saw, you know, just like we saw on the big secret chart a minute ago, we saw a price push up to this high, created this high, and then the next day on the secret chart, we had a lower high and a lower low. Now on the SPY, we didn't get that lower high. I guess we did. It's very, very, very close, right? The high here was 658.20, and the day before it was 658.52. So 32 cents lower. So we did get the lower high, but it wasn't as extreme as we saw on that weighted chart from the big mega cap companies. So that means there's some companies here. Remember, S&P 500 is made up of the 500 largest companies. Those 8 that I was showing you on the chart make up 38% of this 500 price movement, and then the rest is there. So that's what we're probably seeing. We're probably seeing some what they call rotation, meaning money is moving out of those big mega cap names, right? Those tech names, and maybe moving into something safer like Coca-Cola or you know some of these other safer stocks, like the defensive stocks, what they call them, where, you know, they're recession proof, right? These things everybody need, Procter & Gamble and those types of things, where they're selling soap and groceries and so on and so forth. So the Walmarts of the world. So those might be pushing this up. We'd have to look deeper into the market to see if that's the case. But Right now, I'm not trusting this because we get up here and, as you know, as we study support resistance, when price gets up and can't break through, that's a real problem, especially when it starts to then, after it gets there and can't get through, forms a lower low, right? So this day here, lower low here. The lower low matches up to this blue line is a gap we had way back somewhere. Oh, gap actually, no, not that far back, just a couple days back. Right here, this gap, when we gap down, we filled up that gap now and we're coming back down and we're retesting that gap. So we're gonna want to see if this level holds. Gaps are support and resistance. So this is a level. Remember, support and resistance is never just the line, it's always a range. So we're kind of stuck in this little area right now. We might drop back down to this level. I'm going to leave my prediction on, right? It didn't happen in the time frame I thought, but I'm going to leave it there. I think this is where we're really headed over the next week or two. We had a shortened trading week this week. Volumes were low, right? So let's look down below here at the volume. Volumes were low. Thursday's volume was really, really low, right? A lot of people probably just took the long weekend given everything that's going on. But we saw from Tuesday, we had this peak in volume when we came in and the market pushed up in a big way off of the low. Volume dropped the next day and it dropped again the next day. So we're going to watch and see what happens Monday. Monday is one of those days I like to just, as they say, sit on my hands. Probably not going to do anything in the market. Probably not going to even look to take any trades. I want the market to come in, settle back in after the long holiday and kind of show us the hand, right? So we're going to watch what happens Monday. If we start breaking down here, then the week will probably go lower. If we find higher highs above this 658 level, then maybe we do start heading on up to 670, which is our next area here. And we want to watch for that, right? So those are the levels we're watching. We're watching 645-ish, right? 644.82 and 658.52, right? So just the highs and lows of actually Thursday's candle to see which way we want to go. Right now, if you were to ask me, not necessarily advice, but if you were to ask me, I think we're headed lower because of the lower high and the lower low that we saw here on Thursday. All right, jumping now into the Qs, QQQ ETF. This one, remember, is very, very tech heavy. So, this one really correlates a lot more to the secret chart that I shared earlier, where those had a very big component of tech, right? Apple, Microsoft, Google, Amazon. What you see here is very much closer to that. Last week we predicted this would bounce. I liked where we were on the support level. That's why I thought we would bounce here versus on the SPY where I thought we might push lower. But we did hit our upside target here this week. But again, we got up here to this resistance area and just kind of started failing again, right? So Wednesday made that peak just like we saw in the last two charts, and then we had our lower high and lower low again. So this is what the market is giving us right now, right? So I think this week we get stuck here in this little range for QQQ. So the tech stocks are going to kind of go sideways. I think this week is going to be interesting because, as I said before, we're getting into earnings season. The market likes to chill out right before earnings season. So we're going to probably see this week, we just kind of chill in this area. I'm not going to make a prediction for this week for that reason. So just watch this area. If we start breaking back up above, call it 590 on the QQQ, or, if we do for some reason get all the way down here and start breaking down below, then you have to start trading in that direction. Okay, so that's what we're looking at for QQQ. Let's jump on over to the next chart and see what we have here. All right, going over to the Dow Industrials. These are the top 30 blue chip stocks in the US. So Dow did a very similar thing to the others. This was a interesting doji candle here, this little red one. This red candle here just kind of tells me that there's still some uncertainty in the market. We got the bounce. This bounce was expected given all the downward movement. Now the DIA has been the one that's been kind of punished the most this year, coming off of that all-time high of 50,000 up there. But it bounced like we expected, but I had a prediction of lower because of how we broke down below this support. Now we've gone up, retested it, kind of gotten up. If we look back in history, right, gotten up back to this level here, this little area. and then now we're reversing off of it again, lower high, lower low. That's what I'm looking. That's how we kind of start predicting which way we think the next candle is going to be, right? If this one next candle is then again lower high, lower low, then we're starting a new downtrend. So I think we're going to continue. I'm going to leave my prediction there. Obviously, when I do these, I don't ever trade them based on this time. I always give myself time for them to play out. So the levels are still there. The level is still good. We're kind of going down to the gap. We could actually almost take off the prediction, but we see there's the gap back here. Gaps fill, a lot of times, probably close to 80% of the time, the gaps will fill on these very liquid, meaning there's a lot of money flowing in and out of them. There's even another gap here I didn't see until now, which is just below this low. So this whole area here where my prediction line is going to be a very interesting place. Do we find support here and then start bouncing and making higher highs again and higher lows, or do we start breaking down below that and start heading on down to 433? So the level we're watching for DIA this week is this 457.85 to see if we can hold this support area, right? Maybe even down to call it 455, right? Can we find support here and start bouncing higher and creating higher highs? If we do that, then I say the correction is over and we're starting to head towards the upside. If we can't and we start breaking down below and start creating new lower lows below this low here at 451, then we're headed for a much lower level, which is going to be our 433, 444 area, or 434 area for the DIA. So that's what we're looking at as traders, and we're going to pay attention to that now. So let's switch right on over to the IWM. These are the small cap stocks. So these stocks are 2,000 stocks in the Russell 2000, but these are all very small, right? Small companies. A lot of them not profitable yet. I've talked about that before. But look at this. Oh my goodness. This kind of, just gets me excited because you see we have a touch there, we have our touch here, we have touches here. This line here is no longer for me a dash line. I have to make it solid. We have just too many points of truth here where price comes up, either touches and breaks through or touches and reverses in multiple cases. And we're seeing that again here. We're touching. We keep playing with this line. A lot of times what will happen is price keeps pushing. There's a lot of pressure pushing on this area, especially when it happens like this in close proximity. This is what, 1, 2, 3, maybe 7 trading days, right? Where 4 of them, we touch this level and we're trying to break through. Now, this breakthrough is not happening with any kind of momentum because if we look at the volume is just too low for us to break through that. Regardless of the size of this candle, the volume just does not match up. It's not requisite to what would indicate a breakout. So with that said, I think we're going to come on down here, and in the Russell 2000, I think this is going to drop a little bit. We have a lot going on in the market right now as far as interest rates. The Russell 2000 trades on interest rates very, very heavily. So I'm going to switch over to my little prediction line here. So this is how I set up the prediction lines, right? I find the right angle. You see here, we match up the angle, and then I just tack it on to the end. So boom, nothing surprising. I'm going to get stuck in this range. Again, remember, we're heading into earnings season, so we want to keep paying attention to that. As we head into earnings season, this first week, it might be a little, slow, right? We get stuck in the range. And then as earnings start to come out, as the big names and these other companies start to report, we're going to see either a break to the upside here above 251 or maybe a break below 245. If we get any kind of break below this 237 level, boy, we're going to go all the way down and make new lows. We actually have a gap here, so let's mark that for next time. We're going to go ahead here. I'm just going to go and select my gap tool here, and then we'll make that big one so we can see it. So this is going to be our area of target. If we break below 237, we're going to be looking to trade between that 228 and 226 level, right, as we go through the market here. So we're going to pay attention to that. This week we don't expect much. We're going to probably stay in this little range between 250 and 245. So if you're doing anything, you need to get out of the market or wait till some earnings come out. But these are going to be the breakout levels we're going to watch for now. So that's it for that one. So we're jumping over to the metals next, and we're going to see what we're getting there. So that one's kind of gotten a little interesting and heated this week. First look in the metals is gold. Gold futures, man, this chart is so technical. Look at this run up, find your resistance, bounce back, breakthrough, retest is what they call it, right? So it's when we break through a level, we come back to that level and see if it holds. It broke through a little bit here, right? So remember, we're always dealing support and resistance in ranges. I'm not going to mark up the chart because I don't want it to get messy, but you know, we found this little range here and then bounced and created all-time highs. Here, another bounce, and now we come back. Guess where we retested again, right? So we're coming back down. We're retesting the same support level we had back in December. We actually had, you know, kind of tested. Remember, we're dealing with ranges, not points of price. Retested it again here, bounced off. So, man, we gold wants to go higher. It just does, you know, but we cannot, you know, predict or force ourselves into that thesis. We have to respect the lines, right? So we did find our support here. We bounced up. We hit our target. So now we have to kind of figure out what we want to do. But what concerns me with gold right now, gold is tied to what is going on in Strait of Hormuz and the price of oil. As the price of oil is done in US dollars. As the price of oil goes up, the US dollar gets stronger. The US dollar gets stronger. Gold is not the reserve currency in the world anymore, so the demand for gold goes lower. People start wanting to buy dollars, right? So that's what's holding gold down right now. As soon as this war is over and the dollar starts dropping again, right? The dollar, you can measure on the DXY index, right? And see what that chart looks like. Maybe I'll do a short on that. If you want to see a short on that, please leave a comment below and I'll talk about that. But what you're seeing here now, gold went up, made our high, same pattern as we saw on the others. Right on Wednesday we made that high, and then Thursday we started selling it off, which is why you see this red candle here. Now the gold high here was 48.2590. The high on Wednesday was 48.21, right? So the high on Thursday is higher than the high on Wednesday. So this is where the difference between gold and the ETFs we were just talking about are. Those other ones, they had lower highs on Thursday and lower lows. So now here we have a lower low, but we do have a higher high. So we're now encompassing or engulfing, if you will, and this is not necessarily engulfing candle pattern, but we're engulfing this candle. We have a higher high and a higher low. The width of this candle on Thursday is covering up the entire candle from Wednesday, right? Even all the way down to more than half of the candle on Tuesday. So and then this long wick here at the bottom tells me that what happened is price got all the way down here and buyers stepped in and started pushing it up. So it was very bearish. It was very negative throughout the day on Thursdays, but towards the end of the day, price just started pushing back up, pushing back up, pushing back up. This gives me confidence in gold, right? So as things start happening across the world, the dollar gets a little weaker, maybe interest rates start coming down, which is something we want to keep a very close eye on for gold. Then we might start seeing that. So let's see what we can do here. That one is a little steep, even though it matches. I don't like that angle. So I'm going to kind of adjust it a little bit there. You can see it matches up better there, matches up good there. It still matches up a little bit here. So let's go here off of gold. I think we get a little bit higher on gold. You see here we have a nice resistance level. Funny enough, you know, I just drew the line. You saw me do it, and this is how the charts work. Sometimes you start getting this magic where I put my prediction, drop it, and I look back to the left to see if there's any correlation or proof that this level is solid. And sure enough, we kind of tested this level here back in February. So we'll see if gold gets up here, forms resistance. If we can break out and get higher, we can start expecting higher. If not, then maybe gold just starts sitting in this range, or maybe gets back down to 43.98. So that's what we're looking at with gold, and we're going to keep an eye on that. The next one is silver. Silver has a very different activity on the chart here. As you can see, silver had this big run up just like gold, retested its levels. We tested this resistance level here at 93.70, and then now with silver what we're having is it's really starting to get a little bit bearish. We have lower highs here, and look again, we're starting lower highs here again. So we came down, retested this area, which if I look back in time was also kind of a high here. So it's not that strong of an area yet, but it did bounce off of it nonetheless, and it's sitting right around this 71.80 level, where it's kind of trying to figure out its life at this moment. But if I'm reading this chart the way I've been trained to do it, we have a lower high, right? We got two lower highs here, okay, and then now we formed another lower high. So when I start to see that this is the formation of a trend, so we're coming off the all-time high, lower, lower, and then lower again, right? So the high here for this candle is 75.98, and then the one on Wednesday was 76.26, right? So lower high, lower low, downtrend coming, especially with all the evidence here of these other lower highs. I truly think silver is going to come and drop even lower here. I wouldn't be surprised if we see silver drop down to 53.76. All right, let's wrap up everything now with crypto. Looking at our Bitcoin chart here, no surprises, right? One thing I want to do at this point is maybe draw a trend line on Bitcoin here. So we'll make this our regular trend line, right? So our regular trend line extends. Make it a little fatter so you guys can see. I wanted to see this because we've been in this downtrend for so long now, and we started going sideways here for some time, since February. So anytime you start to see this is what they call the stock is basing, meaning it starts to go sideways after a long trend, in this case a downtrend. It also happens on uptrends as well, and a good example of that is on the SPY chart, where we were basing at the top, and then we saw the big drop that we saw. Now we're in correction territory, but we are basing now here on Bitcoin, meaning we found a level in which support is kind of holding. I've been very cautious here when we've been talking about Bitcoin the last couple of weeks, because early in March we had what they call the Clarity Act that Congress was mulling over, and then Bitcoin made this little run in March, and then it got up to this level and pulled back. So this is why we formed this level. It's just got really just the one touch I could trust. There's some action here, but we're kind of cutting through the level a little too much for my liking for that to call that a touch, right? So we have one touch here. We want to see how that holds up. We have many touches here down at the bottom, meaning every time that Bitcoin has come down to this level of 66,339, it found some buyers, right? So anytime Bitcoin got down to, let's call it the 65,000 level, it found buyers. So those buyers haven't been enough to this point to start pushing it higher. Part of that is because of the uncertainty in the market. People are not willing to make bets on Bitcoin just yet, because there's just so much uncertainty in the overall market with the war and everything else that we have going on. Is inflation coming back? A lot of Bitcoin buyers also borrow money to do so, and the cost of borrowing that money right now is extremely high with interest rates where they are. So these are the things we have to keep in mind when we're talking crypto. I hear a lot of chatter about how the Genius Act back last year in 2025 was going to make Bitcoin, the next big thing, right? So, and that was the big run up to the 125,000 here in Bitcoin. And then that kind of faded away. And now we have the Clarity Act they're trying to push. And the Clarity Act, I'm seeing a lot of people talk about all these banks that are now filing for bank charters, and how crypto is going to be the next base currency and all of this jazz. We've been talking about that since the beginning of crypto. Now, the one thing and the only thing you need to pay attention to is the supply of crypto getting smaller, right? Which it is. And are there buyers that are stepping in and wanting to buy that? Is there demand for crypto, right? That's the only thing that moves the price at the end of the day. So we're going to watch this. We're going to see how it goes. I've said it before. I'm a long-term crypto investor, right? I have part of my portfolio, a small part of my portfolio in Bitcoin, and XRP are the main two that I deal with, right? So not suggesting you go out and buy any of that, but I'm just disclosing that for you here. So we're seeing this support level. We got to watch it very closely. If we break down, then the trend will continue, right? And maybe we create another fan here like we did back with our secret chart. But what I'm watching just to see if this level holds. Until we break through, and this is why I drew the trend line just now, until we break through this trend line, there's not much to do. As you can see, we have some time here, maybe another month or two before, if price stays in this range, before we even break through that line, right? So, and that a break there, even if we're going sideways, is a positive break as well, right? So we're watching this, either the trend line or this flat line here up at, call it 75,000. If we can break through and close and continue and start forming lower or higher lows here, right? Start forming higher lows after these levels, then you can start to see Bitcoin going in a positive direction. So Ethereum, same story. I mean, same story, right? So we're looking at that. If we draw the trend line and connect the dots again, you know, we got the same story. We're basing here as well. So we're going to watch that, keep an eye on that. And then XRP has been basing even longer than those guys. So we're going to stay in this range, out of the breakout there, or let's drop our trend line on this one too. I'll just go from that high. This high is too high, right? So like I did once earlier, I dropped down to the next candle below. It still comes through and touches. This one looks like it has a lot more work to do if we're following the trend line, but we do have our flat line here at 150. If XRP can break and close above 150, then maybe we have a chance, but then we're going to bump into the trend line resistance, and we have to kind of watch that. So this one has a lot more work to do than Bitcoin and Ethereum, but we're going to keep an eye on that, and those are the levels we're watching here for the crypto space. Thank you for watching. It's been great sharing this information with you this week. Like, subscribe. I'll catch you on the next one.